don't buy an Escalade in the middle of a loan application because it'll change your numbers. I'm Adam Hamalian,
And I'm Sherry Hutchins.
and this is the real story with Adam and Sherry. A little bit later on, we're going to be joined by our first story guest, Arlo Zorder from Cross Country Mortgage. But before we get to him and talk about why buying a car in the middle of a transaction is not a good idea, Sherry, maybe we should talk a little bit about the first quarter market and some of the stats from that. What are some of the things that we found out when we looked at the first 3 months of the year?
Well, one of the things we found out is that the average list price is about $150,000 higher than it was last year for the first quarter. But the sales price, which as we all know is a lot different than the list price, is just about the same as it was last year during the first quarter. So that's kind of an interesting statistic. It makes you wonder if buyers are or sellers are anticipating low bids or yeah, curious.
Yeah, I mean, it is interesting. I mean, that represent about a 10% below list price average list to sales sold in the first quarter, which is kind of unusual. We've seen it the other way around for such a long time, and it's actually kind of a big number. The other thing that's kind of interesting, we dig down in the details. Homes that have been well prepared are still selling over list price and with multiple offers. In fact, we had a client two clients this spring, this winter, get their houses by offering over. So I think it does mean that houses that are well prepared are still selling. But if a homeowner thinks that they can just put a sign out in front and that they're going to get top dollar for their house, it's just not happening.
Houses that are in good condition are the ones that are really selling quickly.
Yeah. I think that buyers are being a little discerning because they're paying a higher interest rate than they were 2 years ago. It's about the same as it was a year ago, but they don't want to spend 7 or 8% on a house and use all of their cash and then try to
Mhm.
figure out how to do any remodeling. And so that's part of the reason why it's better to have a house, done prepared properly. It makes it easier for the buyers. Which I think actually is a great segue into our guest for today, Arlo Zorner from Cross Country Mortgage. And I'm excited. Arlo's a little bit of a car guy. I don't know if he's a wrench gearhead, but I'm like Mopar. I got some good aftermarket parts right now. For those of you who don't know, I had a hip replacement two weeks ago, a titanium pin and a ceramic ball. And I'm told that when things settle down, it might actually squeak. So I don't know if that has anything to do with cars, Arlo, or mortgages. But we're so excited to have you as our first guest here on the Real Story. So welcome.
Yeah,
Thank you
welcome,
guys.
Arlo.
Yeah, thank you guys so much for having me. It's great to be with you.
Yeah. So one of the things that we like to do is talk about our why we do things. And I was wondering maybe you could tell us a little bit about how you got into mortgage lending and a little bit about your why of what brings you satisfaction doing it now.
Yeah. So I got into mortgage lending all the way back in 2002. I've been local as a lender here in the Bay Area for that whole journey. And let's see, at the ripe age of 22, I was working for a friend of mine. His parents owned a couple of car dealerships. And so I was doing a little bit of the car sales and some of the financing part of it. And I realized that that was just not going to be the right landscape for me for the long haul. But I'm really thankful. I also realized through that I love helping people through a sales process. And so um, mortgages and real estate lending was a great conduit to being able to help the families do something that I like.
That's great. That's similar to we like helping people getting in the houses too. So our motivation, I think, is pretty similar. We like to be able to. We have mutual clients with Arlo all the time. We like to send people his way, and one of the reasons we like to do that is because he is a great advocate for them. And I'm wondering if you can give us a little insight. So you work for. Actually, I'm not even sure whether you're a mortgage broker or a mortgage bank, but the difference between your company and say like a big bank like a Wells Fargo, Citi, B of A.
Yeah, great question. So we're what's called a mortgage banker or a direct lender. Cross Country Mortgage is actually the largest retail lender in the United States, which is hard to believe because they've grown a ton in the last few years. And it's just by a fraction. There's a few other people who are really close with us. I think the big difference between us and the big box banks, there's definitely a couple. For myself, one's probably expertise. I've mentioned that this is all I've done since 2002. So Unlike a bank, we don't have other financial services and products that we offer. We're laser focused just on the mortgage part. So I've never done checkings and savings and credit cards and auto loans and some of those other services that the banks provide. I have just literally cut my teeth only in mortgage for over 20 years now. So expertise from a loan agent is one of them. And then we're also not a publicly traded company. So
Hmm.
publicly traded companies, they have to answer to the shareholders. They're a little more risk adverse. And there's a lot of programs and things that cross country mortgage doesn't offer that you can't get through a bank.
Hmm. That's one of the things that we tell our clients when we refer them to you. First of all, that we like working with you because you treat our clients like we treat our clients, and we have similar, you know, ways of working with clients, and we like that about you. But we also often tell them that you have options that a big bank does not have when it comes to fitting them into the best loan, as opposed to going to a big bank. And we love big banks, don't get me wrong, we work with them every so often. But they seem to have one type of loan. And if you fit into that, great. If you don't, you might not be able to buy a house with that bank. So,
Yeah, it's so true. Loans that are specifically designed for people who are self-employed. One of the things that comes up a lot right now is how do I buy my next house first and then sell my current house afterwards? So it
yeah,
may be a bridge loan, or there may be some alternatives to a bridge loan that are more cost efficient.
yeah,
But the bank's navigating those different scenarios. If it's anything less than that perfect box, they can really be a pretty big disadvantage. And actually, a lot of times they're telling people the answer is no, when really there's some other great ways they can do it.
yeah, that's exactly what we say to our clients. So,
Carla, can you maybe tell us a narrative of a family or a specific situation that you help somebody so we can kind of get a picture of what it's like to walk through the process with you?
Yeah, so everyone is treated specifically. I always kind of make the joke, this is not, I'm not push button get mortgage. And all
mhm,
jokes aside, we use technology, but we don't use technology as a way to understand what people's needs are. And so creating really connecting with people and understanding what ingredients they have to work with and what the goals are and the timelines, that's an important part of the process. Did you want me to walk you through a little bit more granular, like what pre-approval looks like, or?
Sure. Anything that would be help one of our listeners understand what it like. They call you up. What should they expect?
Yeah, yeah,
mhm,
okay, that's a good one. So there's typically three main steps that are involved with me helping a family get from first call to properly pre-approved and ready to start submitting offers. Step one is going to be a discovery call or an introduction call. Easy, either in person, phone, or Zoom. I'm getting to know them and vice versa. They're getting to know me. I'm assessing their needs and talking to them about the ingredients that are going to make up their pre-approval and also starting to answer any questions that they have. And so all the information that's gathered during that call is what shapes how we do everything for them the rest of the way. So that's step one. Step two happens in the middle. That's the actual kind of mechanical part of pre-approval. So we're going to take their application and of course collect the documentation that's needed for the loan. And then once we've done those two things, that allows us to formalize their pre-approval. And we use all the information that we gathered during the first call. What price points were your goals? How much money did you want to use? What were your monthly payment boundaries or ranges that you're trying to fall within? So in the middle of the process, we put everything together and formalize pre-approval. We prepare all their figures, put them all in writing. And then that transitions us to the third and final step, one more follow-up appointment where I present the options to them. So I give them everything in writing in advance, and then we'll have a meeting and I'll walk them through everything. And at that point, they're armed and dangerous and ready to start writing offers when they find the right property.
you hand
Yeah.
it back to us.
Yeah, we one of the things we tell all our buyers is they got to be pre-approved before they seriously start shopping because they'll need that pre-approval letter to write an offer, and they don't even really know what their budget is until they've taken all those steps with you because they might they might have plugged in their numbers into some website, but until they have fleshed out all the details and they don't understand the significance of things, they don't know like what I'm like. They might think I can do $5,000 a month on a monthly payment, but they didn't realize that at that price point, they're gonna have this, and that, you know, not just that, whether it's the mortgage, but also property taxes and insurance and things like that. It's important for them to have all those details.
I
Um,
think, can I jump in and
yeah,
say I think that we use the term pre-approval pretty loosely when in fact there's such a thing as pre-qualification, pre-approval and desktop approval. Arlo, can you elaborate on those terms for us?
Yeah, absolutely. So think of it as different levels, pre-qualification or pre-qual. That's just verbally information that's being exchanged. You can't really submit an offer in today's climate with a quote unquote pre-qual. Um, the next level would be pre-approval. That's the kind of the minimum where people are going to need to be. So that
Mhm.
means taking an application, running credit, collecting all of their income and asset documentation, and then doing the calculations and how the income is going to be treated and reviewing the credit. Taking things one step further, or maybe the final step would be called underwriting approved. And that's where instead of the loan being determined at a loan agent's level that you qualify, ultimately loan agents don't make the loans to the consumers.
Mhm.
These banks and mortgage companies have an underwriting department.
Mhm.
So it's taking something that traditionally happens later in the process and doing the underwriting very early. That puts them in the driver's seat to write as strong as an offer as possible. So you have pre-qual is just verbal, pre-approval is where all real documentation happens, and then underwriting approval is the strongest form where they get to present that to the seller and let the seller know they've been underwriting approved.
So we note that in your pre-approval letters, quote unquote, pre-approval letters, when we attach them to an offer, and it makes a difference to the seller to know that somebody has been underwritten versus just pre-approved, and can change the way an offer is looked at, whether or not it's accepted. And it's not just prices. We always say it's terms too. And that's certainly a strong term for people to be aware of.
Yeah, absolutely. I think it was last year in 2023, roughly, they changed the contract. The purchase agreement in California now has a box where you indicate to the seller, I have been underwriting. Yes, I've been underwriting approved, or no,
Mhm.
I have not been underwriting approved. So combination of what pre-approval is going to look like and then the physical offer that's made to the seller, it really can give them an upper edge against some other buyers who haven't had that step done.
I think this process can be really overwhelming for a buyer because when they meet with us, we talk about the buying process. Then we hand them over to you and you talk to them about the loan process. And hopefully we get them to a point where they really understand the process, so that they can be informed buyers and make good decisions about how to write a competitive offer if they end up competing. We have buyers who come to us often with a letter because they got on the internet, at 11 o'clock one night, went onto a website, filled out all their information, and it spit out a letter that said, "You're pre-approved to buy a house for $5 million." And they think they're ready to go when really that is just a piece of paper that means nothing.
Yeah. Sometimes I see them getting that quote unquote letter, and then I'll ask them, tell me a little about tell me a little bit about your pre-approval process. Did you give them your pay stubs and W-2s and documents? No, I just like answered some questions online. I'm thinking,
Yep,
okay, like nobody
yep,
knows if you really qualify for a loan yet because you
yep,
got what's called a pre-qual, as we talked about earlier, verbal
yeah,
information.
yeah. It's a big step from there to getting them actually ready to think about buying a house.
Yeah.
one of the things that's affected the market over the last 18 months or so has been the interest rates. Arlo, I wonder if you can give us a sense of where you think interest rates are going to be going the rest of the year. I know the Fed speaks into that, even though it's not a direct relationship.
Yeah, so it's been a tough pill to swallow for consumers, no doubt. You look back at, and also this chapter being written right after the pandemic, where mortgage rates were close to 3.0. So you have rates went from 3 to 7 in a period of about 4 to 5 months back in 2022. And so fast forward to present time, the Federal Reserve says they're lowering rates 3 times this year. I think that may be a little optimistic. Um, Affordability has absolutely been a challenge during this higher rate climate. There's some products and strategies that we'll use to combat that, and they're usually shorter term solutions. So think maybe 1, 2, or 3 years we're looking to build a bridge maybe to finish getting out of this higher rate environment. So sometimes we'll look at some mortgage products where the rates have a discount associated with them for the first 1, 2, or 3 years. And that should serve as a bridge to get them from where we are right now into a little bit of a more normal or lower rate environment.
What do you think that rate's going to be? Not to put you on the spot or anything,
No pressure, huh?
right?
You know, pre-pandemic, we were at 4%.
Yeah.
Right now, when they look out about 24 months, they're targeting about 4.5 to 5.
Wow.
I personally feel I'm not using the word fours. Like sometimes when I'm meeting with a consumer today, it's let's live in today and look at where rates are right now.
Hmm.
And then let's also get an idea of if rates hit 5% even in the next couple of years, what would that do from a payment savings standpoint? So I think 5% plus or minus a touch within the next couple of years is a reasonable projection. Um, no one has that crystal ball, but that's kind of some of the forecasts are for the low fives by the
Okay.
end of 2025.
Yeah.
Mm.
So
Wow.
one of the things that we're noticing for buyers, and it's been true for a while, but I think feel like it's happening even more, especially first time home buyers. They're getting help from family members for down payment. And I remember back when we bought our first house, we had help and we had to season that money as a gift from family members. I was wondering if you could talk about what does that gift process look like these days, and is it happening? Should people feel ashamed that their parents had to help them out, or how common is it? And maybe you could talk about that.
Yeah, absolutely. Yeah, gifts are really common right now. So many people getting started with where costs are. And some of the wealth that maybe the older generation has right now, starting to see some of that transfer. So gifts are really common. They There's really no downsides to the gift. You don't get a higher interest rate when you get a gift from a family member. You don't qualify for like lesser house, so the guidelines aren't more stringent when you're getting a gift from a family member. So if you're in a position where a family's offered to help, then you should absolutely take advantage of that. Or if it's going to help create home ownership for you, then it's a great way to proceed. The gifts do not need to be seasoned. So typically, from a documentation standpoint, the easiest way to give a gift is have the family member, most often it's mom or dad, sometimes it's grandparents, just transfer the money directly to escrow at the close of the purchase. So I may pre-approve a buyer today, but they might not buy until the fall, and they're working through a competitive climate, waiting for just the right house. When they finally find the right house, maybe they get outbid once or twice, but eventually they find a lull in the market. They go into contract this fall. That way, the person who's giving the gift can keep those assets intact. In present day, you can earn quite good interest on money that's in the bank. So the parents can hold the gift the whole time. Doesn't need to be seasoned or go anywhere until they're actually in contract and completing the purchase.
Hmm. Interesting. When I first got into the business, it didn't work that way. The gift money was given to the giftee, and they
Yeah.
had to put it in their account and kind of wait a couple months and before they started looking for a loan and looking for a house. And I'm just curious, why does that change? Who makes the decision to change something like that?
Yeah, for the last at least I've been doing loans since '02, but my little brain works really well, maybe for the last 5 to 10 years of rules and guidelines. It's been that way for quite a while.
Yeah,
Um, the
I
other
go
way
back
was
a
maybe,
little farther than you do, so I know that things change. They change all the time. I don't know how you keep up. I mean, not only with interest rates from hour to hour sometimes, but just all the rules and guidelines that are coming from the feds.
yeah. The
It
sneaky
seems like a
part too is when you have a foundation of knowledge built for X number of years and then guidelines and rules change. I mean, there's really quite a bit to keep track of with all the different programs and different flavors of who allows what and what set of
yeah,
rules go with what guidelines.
yeah.
Yeah.
Well, 5 or 10 years sounds like a lot.
Yeah.
Any final thoughts, Arlo, that you'd like to share about anything lending, or anything about parenting, or anything about cars, or whatever, anything you want to talk about?
Well, I'm definitely just climbing the ladder with a 4-year-old daughter and an 8-year-old daughter. So I'm not quite qualified yet to give parenting advice.
Okay.
But on the lending front, I would just say, getting a roadmap early is really helpful. So if you think that you want to purchase in 6 to 12 months, talking to a lender early is super important.
Yeah.
People have preconceived notions, and sometimes they're right, and a lot of times they're not. There's just so many details. So I catch people all the time who think, hey, I'm gonna wait till save for have 20% down because I need to have 20% down, right? And they definitely don't need to have 20% down. Sometimes they can just use a little counsel. There's things that they can do, like maybe their timeline is 6 to 12 months, but there's things they could be doing during those 6 to 12 months,
Mhm.
or I should maybe even say things they should be doing or things they should not be doing, depending on their profile. It's also specific to them. So there's no cost involved with pre-approval, and just getting that education early and having a roadmap laid out early can really be helpful and kind of point the mind in the right direction over time.
Well, that sounds great. Well, one of those things we teased at the beginning about things not to do, don't go buy a new car in the middle of home shopping because it totally changes your debt to income ratio. Sherry, didn't you have a transaction one time that like went south because a buyer or seller bought an Escalade or a Cadillac?
It was a really expensive Mercedes. I guess he'd been wanting to buy this car and it was a short sale, so it gives you some idea how long ago it was. And he just got tired of waiting, went out and bought a really expensive Mercedes on credit. And all of a sudden, I had a short sale approval, and he no longer had a acceptable debt to income ratio to qualify for the loan. So,
Oh
but it
gosh.
closed. Everything closes.
Yeah. Well, not everything, but
You just have
uh,
to figure out how to do it.
yeah.
So,
Thanks everybody for listening to it this way. Especially thank you to Arlo Zorner for sharing with us about mortgage. Arlo, if somebody wanted to reach out to you, what's the best way for people to get in contact with you?
If they're listening to this podcast, they're probably within your sphere. So you guys are welcome to reach back to Sherry and Adam and ask for an introduction, and they will definitely connect us. You're also welcome to call me. My phone number is 925-289-9770. That was 925-289-9770. Always happy to answer some questions or take things farther with pre-approval.
All right. Thanks, Arlo. If you like this podcast, then press like and subscribe. Recommend it to your friends. We produce this about once a week, hopefully with good content for you all. And again, thanks, Arlo, for being our guinea pig on having a guest on it. So thanks
Yeah.
for everybody for watching The Real Story with Sherry and Adam. Have a good week.
thanks, everybody.
Bye now.